Are robo-advisors a good idea for investors? The service is almost like putting your portfolio on autopilot. All anybody has to do is answer some questions and the broker's computer builds a portfolio for you. First it was startups, but now retail investing giants like Charles Schwab are jumping into the robo game. With more on this, Wealth Health Managing Director Ed Butowsky. Ed, great to see you on the show.
Good to see you too.
Do you like robo-advisors? I know you're starting your own service, but is it a good idea for folks?
Yeah, I think it's fantastic. I mean, what it really does is it puts, the focus on what are you hiring a financial advisor to do? Because a lot of financial advisors need to up their game because a lot of these robo-RIAs, and there's some very good ones out there, do exactly what an investor wants, and that is assess your risk, assess the time period that you have to invest, and then build portfolios according to these questionnaires. And you know what? It's exactly what people want. They don't need you to take them out to lunch and then overcharge you. They'd rather sit there and talk to a computer. They really
would.
Ed,
it raises the question, if you're going to have a robo-advising service, why do they need you? Right? I mean...
Exactly. That's exactly right. By the way, this is what I do for a living. I am building my own. But you know what? We have to prove our value to clients, and most advisors just can't do it.
Right.
I love this. There's Wealthfront out there, Betterment, Schwab has one. And a lot of the other thing that's interesting about this, Gerri, is a lot of the big firms don't want a lot of the smaller clients. And what they've said is this is exactly what we want for those smaller clients. So don't be surprised if one of the big firms doesn't come out with one pretty soon as well.
Well, and I think, look, if you're young and you're just starting investing, this is a great way to get launched. 40% of Americans are not investing right now. Is this a way to get people to trust the market again, do you think?
I don't think so. I think that, if they don't trust the market, then they might not trust, handling their money through a robo-RIA. But what this does do is, Gerri, when the Glass-Steagall Act went away, insurance firms, CPAs, and a lot of banks got into the investment business, and the knowledge base in our industry really went downhill because there were so many people that didn't have the proper training. But a really interesting little secret, most investment firms don't train their advisors on how to construct a portfolio and measure risk. This does it for you. This is really a wave of the future, and it's necessary because it's going to do a couple things. People are going to pay a lot less to have their money managed, which doesn't make guys like me happy, but it's the truth. And two, it's going to force people in our industry to do a better job for their clients.
Well, let's talk a little bit about those fees. So Schwab is saying that they're doing it for free, although there is some baked-in cost, but largely they're not charging for the service. Take a look at robo-advisors that we've seen, 15 basis points, half a basis point. Live advisors, 1% like you or more. This really cuts costs. And don't we know that what most affects investors' returns, small investors in particular, is the fees they pay for money management?
Yeah, well, fees are negative alpha, meaning, it definitely takes away from it. And all people in my industry are feeling that. We make about 70% less than we did 10 years ago with fees. And, it's funny because for years we would always be competing against the Merrill person and the UBS and the Goldman person. Now we're competing against computers. It's really amazing that I can't badmouth the computer now, can I? I can only, it's unbelievable how the industry has changed, but it's something that people should really take notice of. And they're going to get better and better. And I like it. I like it a lot.
Hey, Ed, before you go, what's going to turn these markets around? We've really seen some negative selling here. Do you think we're all just waiting for the Federal Reserve to make up its mind about what it's going to do? What's holding things up here?
Yeah, you're going to have a short-term move when the Federal Reserve, if they do increase rates. But the key thing here is they only move short-term rates. They only move the discount rate and the Fed fund rate. And those moving up, not a big deal. What's going to move the market higher is going to see increased earnings and overdoing the earnings in terms of what was projected. And I don't think that's going to happen, Gerri. I'm not a big fan of this market right now.
Ah, very interesting. Ed, you must come back and tell us more about that. Thanks for coming on.